So today is on a Thursday, the fourth trading day this week so far. I want to do a market recap on some of the entries that I did take this week and some of the entries that I did take today on silver, gold, and also I'll do a market forecast on NASDAQ, and probably we'll look at what the NASDAQ is doing. So without wasting time, we'll jump straight right into the market and try to see what the market has been doing. You know, previously, if you can watch from the previous videos that I've been making, if you can look at them, I've been looking at this market all the way from the moment it was up here. We've been following it all the way down here, and as you can see right now the market is giving us these buys entries at this point. But I want us to look at this market from the bigger perspective, because if you've been looking at my videos, you know that normally before I do anything else, I have to understand what the market is doing from the bigger time frame before coming down to the smaller time frames and try to look for my entries there. So if you look at this market already from this 1 hour time frame, you can see that this market from this bigger channel, this market is on a downtrend. You see, this market has been on a downtrend for a very long time, about 2 months right now. About 2 months, actually about 2 or 3 months right now. Let's see, because as you can see from May all the way to date, this market has been on a downtrend from this bigger time frame, and that's because you see, after having this impulse move all the way from down here. See, that's because after having this impulse all the way from down here, so what was happening around this area probably is a correction before the market probably might continue pushing to the upwards. So if this market does break above this channel at this point, then from the following week, which means it's from next week, we'll be looking for different structures in the market, which means we'll go into a bullish market and we'll try to see whether we can get some few opportunities from there and make money from there. So that's how I've been looking at this market from this bigger time frame perspective, because this one, if you look at this one, it gave us this inverse, this head and shoulder at this point, whereby it did respect it, but the market hasn't broken below this neckline at this point. And if you can look at this area, this is a very strong support that we have at this point. So this is a very strong demand zone that we have down here, which means the market has failed to break below this area. So if it could have broken below this area, which means our next target could have been down here, this is where we could have been looking for the market to go if it did break below that, but it didn't break below that. So I want us to go back to the 1 hour time frame. And try to see what the market is doing. And also, guys, I told you that whenever you're looking at the gold market, you see, you always try to understand the structures that the market is giving you. And I told you guys that the market normally moves in 3 circles. That's impulse, correction, then impulse again, and sometimes the market might give you a consolidation, and that consolidation probably happens when the market is giving you a correction. So if you look at this market at this point, from May at this point, we had this big impulse move all the way from up here. Then after having this big impulse move all the way from up here, we had a correction. Then after having this correction again, we expected the market to break below this correction area. Then we look for a few sell entries. Then you see the market did give us another impulse move at this point. So we had this impulse leg all the way from up here down here. So after that again, we did have a correction. So this is what was happening last week. So this last week, the market was giving us this correction. Went up a little bit, came down, gave us these high highs and high lows from the smaller time frames. That was from the 1 hour time frame. You see, it gave us these high highs, high lows. So we did take some opportunities here. We did take some buy entries at this point. So I want us to focus on what we did take, what I did take this week. So far on Monday, I didn't get much of opportunities, so I didn't take any trades on Monday because I didn't get what I was looking for. But if you look at this market, you see, from last week, this market went up all the way to this area and confirmed whatever we were looking for, because I told you guys that normally after having an impulse move, you always expect the market to give you a correction, and you look at it, it gave us this correction, and always after a correction, the market has to give us an impulse move again, and that's exactly what happened at this point. So you see, so this market gave us this impulse move at this point. So after this impulse move, we went into the weekend. Then after that, coming back on Monday, the market was playing around this area, giving us this kind of correction at this point. So I was expecting this market to give us a correction at this point, then continue pushing to the downside, because still when we are looking at this market, it was on a downtrend. It was on a downtrend from this bigger time frame channel, because if you look at this, I could have called it a fake out. The reason I call this a fake out is because if we look at this market from the smaller time frame at this point, if we look at this market from the smaller time frame at this point, you can see that at this point we had a divergence. So we broke above this area, then the market gave us the divergence at this point. And whenever you see the market giving you a divergence, that is a reversal pattern. So we had this divergence at this point, and again we had so many reasons why this market could start pushing to the downside. Then again we did see this market gave us these we had these double tops at this point. So we see this market came up, gave us the double top at this point. So at least we had a few reasons why this market could reverse at this point. So because if you look at it, it gave us a divergence at this point. Then after giving us a divergence at this point, gave us this double top at this point. After having a double top, we see the market broke below this area, and again we see it broke below this upward channel that we are having at this point. So it broke below this upward channel that we were having at this point. So probably at this time, at this point, the market pushed all the way down, but I did miss this entry. I didn't get this entry, but I did a market. I did a recap on this. It's still on my other videos, so you can go check it out. So after having that impulse move all the way from the down there, after missing that entry, I was like, okay, let's just wait for this market again to give us another opportunity. Let's wait for this market again to give us another opportunity. So coming on Tuesday. On Tuesday, you see, this was on a Monday. This was on Monday. The market gave us this correction all the way. After that, we had this correction because, again, if you look at this area down here, from this, if I zoom in like this, if you look at this area down here where this market was rejecting, this was a support zone or a demand zone. And normally, whenever you see a market approaching a demand zone with a correction, that means that there's a high possibility of that market breaking below that demand zone and continue pushing to the downside. And that's exactly what you see the market did at this point. So it came down here to this demand zone, went up a little bit. I know some people did take buys at this point, which was still okay. If you're a scalper, that was still okay. You could have benefited from that. But if you're a swing trader, that could have been a very bad idea, because you see this market was approaching this area with this correction, and whenever the market is approaching a demand zone with the correction, that means that the market will continue pushing to the downside or wherever direction it was going. So if you look at this market, we had this correction on Monday. Then after having this correction on a Monday, I want you to see the kind of structure the market gave us up here, because you always have. So after this market giving us this correction at this point, I was looking at this area. This was a key area that I was looking for, because you see from the previous we had this area up here. So I was looking how the market will react to this area up here, and after that I tried to look for a few, and I did take a few sell entries at this point, because you see, after this market breaking below this area, I thought that this market is now ready for me to go in, but that didn't go in as expected. Let me show you a little bit about that. So this is how I had my trend lines at this point. So I was thinking that this market, after breaking below this area, I was expecting it to continue pushing to the downside, but it didn't go my way, because you see at this point we see the market started rejecting around this area and pushed up a little bit, took out the stop losses that I was having, because the first entry that I did take in this market, I was having my stop loss just right above this area. So it went up, took out my stop loss. Then after taking out my stop loss, I looked how the market is approaching this area, because this was another key zone that I was looking at. After the market failing to respect the entry that I had down here. So after that, you see the market came up here, gave us this doji candlestick at this point. After giving us this doji candlestick at this point, we had this. I saw this market and again, after giving us the doji candlestick at this point, we see this market gave us this double top at this point. We had a double top at this point. So after having this double top at this point, and again having in mind that this market is on a downtrend, I saw that this is a good opportunity for me to go in and take my sell entries from there. So I went in and took my sell entries from up here and had my stop loss just right above this area, because I was like, if this market doesn't break, doesn't respect this, which means I'll expect it to continue maybe playing around this area for quite some time before it gives me another opportunity to go in. And after that, the market did respect that one. I pushed down, it pushed down all the way to a first take profit. I'll show where my first take profit was. So down here, this is where I had my first take profit. My second take profit was down here, and my third target was all the way down here, but it didn't go all the way to my third take profit, which means I took it out at my first take profit at this point. So I didn't hold it all the way down there. So the reason I did take it out at my first take profit is because I saw that this market had already given me about 248 pips at this point. So I was like, there's no point of me continue holding this market, because I have already gotten 248 pips. So if I continue holding, I could be greedy, and you know, guys, the gold market is very volatile. It can go back again and take all that it had given you. So after that, then I saw this market reacting around this area. Then I saw this market playing around this area. I did take a buy entry at this point, but it didn't go as expected, which means I ended up taking a loss at this point, which was a very bad entry. This was the worst entry that I have ever taken. So because I didn't wait for this market to break, I should have waited for this 1 hour candlestick to close above this area, because you see we had this, I saw this market came down, went up a little bit, came down again. So I was looking at this as a double bottom at this point, because again, when you look at this from this bigger time frame, this was the key area that we are having at this point. So I was thinking this market might respect this zone that we're having at this point. So because you see, it came back, gave us this double bottom at this point, but I didn't wait for a confirmation. That's why you must always wait for the market to give you a confirmation before taking any entry in the market. So you look at this market at this point, you see we had this double bottom at this point. So I decided to go in before it breaks. It had broken below, above this area, which was a mistake. So, and it didn't go my way. You see, this market, I should have waited for probably, if this 1 hour candlestick could have closed above this area, then which means that could have been a very, very good entry for me to go in. Then I could have taken my first take profit at this point, this key area that we have at this point. Then the next take profit could have been all the way up here, but that didn't happen because I didn't wait for this market to give me a confirmation. So I took a loss on this. That was about 76 pips. After taking a loss on this, so I did wait for Wednesday. On Wednesday, I didn't take any entry again. So this is what I took on Wednesday. After that, this is on a Thursday. This is now today. Today is on Thursday. So this market had already come all the way to this area down here. And if we go back to the 4 hour time frame, this is a key area that we are having, because if you look at this point, this is a key area that we are having at this point. And looking at this market coming down to this area, we started seeing these rejections at this point. So we had this long week candlestick rejection at this point, and after that, we see the market playing around this area. Then after seeing this market playing around this area, I was keen on this and try to look for a reversal patterns at this point, and try to see if I can get a few entries on this. So looking at this market at this point, I saw this market playing around this area, went up, came down again. It did give me a double bottom at this point. So at least I had one reason. The first reason is I saw the market was reacting around this demand zone, and it failed to break below this demand zone. So which means that told me that this was a very strong demand zone, and the market might not break below it. So I said that if this market, I started looking for my key areas at this point. That's why you saw I marked this as my first key area at this point, because this is the first higher high that the market had already given us at this point. So we had this, not high, this lower high at this point. So after having this lower high at this point, see, the market went down a little bit. Then after that, I waited for this market to break above this area that it had already created at this point. So you see, after this market breaking above this area, so I went in and took my buy entries from this point, then having just my stop loss down below this area. Then the market pushed straight to my take profit today, which was about 150 pips. So that's how I was looking at this. That's how I was looking at this gold market. And still, I want to show you what I'm expecting this market to continue doing, because at this point, and again, there's another thing. That's what I wanted to show you. So another thing that probably might happen at this point. So if you look at this market, we are still on this downtrend at this point. So if this market does go all the way and breaks above this area, so if this market does go and breaks above this area, which means that now we'll be looking at this market in a very, very different perspective, and now we'll just go from a bearish market and it will go straight to a bullish market. So which means at this point we'll be looking for only buy entries in the market, because the market will continue pushing to will continue buying a little bit. So that's how I'm looking at the gold market right now. After now looking at the gold market, I want us to go and look at silver, because today I did trade silver too. I did add silver to my entries, or to my I did add silver to my watch list. So looking at silver again, silver normally moves like gold. So if you understand what the gold market is doing, which means you can understand what the silver market is doing on the other hand. So if you look at the silver market, this market has been on this downtrend all the way, giving us these lower highs and lower highs, lower low, lower high, lower low, lower high, lower low. Then again, at this point where we have this market down here, this is a strong resistance zone. This is a strong support zone that we have at this point, and you see this is a strong support zone that we have at this point. So the way I was looking at this, silver market is we had this impulse move at this point. So I was looking at this, what was happening at this point, as a correction. This is a correction, and I saw this market reacting around this this demand zone that we're having down here. So I decided to go to the smaller time frame, which was the 1 hour time frame, and try to look if I could get a little bit of, probably if I could get my entries from there. So looking at the 1 hour time frame, I saw this market giving me this divergence at this point. And normally, guys, when you see a market giving you a divergence, that's normally a reversal pattern. So I saw this divergence at this point. So after seeing this divergence at this point, at least I wanted other few reasons why I could take this trade at this point. So I waited for this market at least to give me a double bottom at this point again, because if we go to the smaller time frame, that's where it's a little bit clear. So this market went up a little bit, gave us a double bottom at this point. Then after giving me a double bottom at this point, I waited for this market to break above this immediate lower high that it had already given us at this point. Then after that, I took my entry from that, having just my stop loss right below this area. So I'm expecting the market to continue pushing a little bit all the way up. So this should be your first take profit if you are taking this entry at this point. So this should be your first take profit, because this resistance zone that we have at this point, we can't ignore it. Then again, but for me, I'm having my first take profit at this point. At that point. Then probably if the market does break above this area, then at least we'll expect it to continue pushing upwards. And again, looking at this market, there is a possibility of this market continue pushing up a little bit. There's a possibility of this market to continue pushing up, because you see it has already broken above these this downtrend that we are having from the 1 hour time frame. So we see the market has already broken above this. So probably what might be happening at this point is the market might be giving us a retest before it continue pushing to the upper. So we'll probably see the market going down a little bit, maybe to retest this area that we have down here. Then after that, push up a little bit to this area. And if it does break above this area, we'll expect the market to give us a correction. A retest, then push all the way to this area up here, and it might continue pushing further upwards. So that's how I'm looking. That's how I'm looking at the silver market today. So another pair that I did look at today is the NASDAQ. Let's see how NASDAQ is playing, and probably let's see how NASDAQ is playing out. So this the NASDAQ I was looking at. So you see, as obvious, before doing anything, I have to go to the bigger time frame and understand what the market is doing from the bigger time frame. So if I go to the bigger time frame on this NASDAQ, you see the market has been on an uptrend for a very long time. So we have been on an uptrend on this NASDAQ market for a very long time. About 6 months now, the market has been moving upwards. It has been a bullish market. So still right now, this is a bullish market because the market is still continue pushing to the upwards. We had this impulse move at this point, and after having an impulse move, obviously the market has to give us a correction. So we had this impulse move, then give us this correction at this point. Right now, you see this market has already broken above this correction area. You see this market has already broken above this correction area with this bullish engulfing candlestick at that point. And going down to the smaller time frame, which is the 1 hour time frame, this market did break above this area. Then after breaking above this area, went down a little bit and gave us this retest at this point. So probably you could have taken your entry point then. So like right now, you could have taken your entry from this point, then hold it. Maybe your first take profit should be at this point, then after that hold it all the way up here. So that's how I'm looking at the NASDAQ market, and I'm expecting it to continue pushing up for quite some time. So that's how I'm looking at this NASDAQ market. And thank you for watching, guys. This is Profit Edge signing out. Make sure you join my free Telegram channel. The links are in my bio. And also make sure you subscribe to my YouTube channel so that you'll be getting these analysis whenever I'm dropping them out. So thank you guys for watching. This is Profit Edge signing out. Adios. See you in the next video.